Hey, what's going on, guys? I hope you guys are having a good day. I'm Dr. Boyce Watkins from Your Black World in the Black Business School. I'm assuming you guys can't see me just yet, but I'm going to give you a chance to kind of come into the conversation. I wanted to talk to you guys about something that I was reading in the media not too long ago about Warren Buffett. And there are people, believe it or not, there are people that are starting to question whether or not Buffett has lost his touch when it comes to investing. I wouldn't say he's lost his touch. I think that a better way to say it is that maybe he's not as great as he used to be. Maybe he's still good, but his conservative investing style isn't a fit for the current economic environment. I'm not 100% sure, but there were some things that could be considered downright concerning in terms of Buffett and his ability to make returns and exceed the returns that any monkey can get in the stock market. And so anyway, as I get started on this conversation, do me a favor, please hit the thumbs up button. If you haven't hit the thumbs up button, please do that. And I want to say welcome to the Black Financial Channel if you want to know where you're hanging out with me today. So anyway, so here's what's going on. So I was reading on CNN Money, and basically on CNN Money, there are people that we're kind of openly speculating as to whether or not there is some issue with Warren Buffett and his ability to do what he's done in the past. I mean, Warren Buffett is kind of, he's known as the Oracle of Omaha. He's seen as the guy that just kind of knows everything about investing. And I'm going to tell you, as a financial scientist, one of the things that we kind of were taught is that people like Warren Buffett don't really exist. That there are people that may get lucky and may have some good picks every now and then, but there's nobody that can really consistently outperform the market without there being associated risk that matches the investment. So it's not to say that Warren Buffett doesn't do well. It's just to say that a lot of times there's a reason that people do well. Like you may think that they're doing well without taking on more risk than everybody else, but actually the connection between risk and return, meaning that nothing ventured, nothing gained, that old saying, or if the more risk you take, the more money you can make, or what people say, scared money doesn't make money. Well, basically all that's really pointing to is this fundamental fact of the financial universe, which is that additional risk is supposed to lead to additional reward, right? And that's kind of true all throughout life, really. And so anyway, a lot of people are questioning Warren Buffett right now because his returns haven't been that great. And I've been talking to you guys about what's going on in the stock market, and the stock market, I really feel bad for you if you've never thought about investing, because the stock market has been a wonderful place to make money. I'm not just talking about this year or the last couple of months. I'm talking about the last 50 years. The stock market has been the place to be. I don't know if it's always supposed to be like this. I don't know if things are going to change. Maybe the market has something in the future that we've never seen before. But I will say that that the stock market's just been phenomenal. And so anyway, with that said, basically Buffett's been one of those guys that has really made it work for him. He actually tells a story about how he bought I think $144 worth of stock in 1942, and it's now worth about $600,000. And when I think about that, I think about what we talk about as Black people. We talk about reparations, and we're waiting for people, some of us are waiting for people to write us a check or to do what they're supposed to do and and make things right financially for us. And I think that's true. But the thing is, you actually have the ability to create your own reparations. Sometimes when you're waiting for somebody else to do something for you, you miss all the things that you can do for yourself. When I was in college, I remember I used to get really mad because my mother wouldn't send me money. My mother only sent me 2 checks for $25 over a 4-year period. And I thought that was so unfair. I said, I got friends at school who are sending me, whose parents are sending them money every weekend, and you should be sending me money. My mother said, no, I'm not sending you any money. You can go get a job. And so here's what happened. So, against my own wishes, with my mother being the evil person that I thought she was, I went out and I got a job. And what I found was that by working and earning my own money, I actually had more money than most of my friends. I would have hundreds of dollars in my pocket, and my friends would get the little $20 a week that their parents would send them or whatever. and that would be all that they had. Whereas I had money, I could buy, I could have bought a car or whatever I wanted. I just didn't. I mean, I could have though. So anyway, the point is that your reparations are all around you. The stock market is a great place where a lot of wealth can be built. If we just took the amount of money that we put into fast food, just take the money you put into fast food, or the money we spent on the going to see the movie The Black Panther. Like, think about that money. Black folks spent $700 million supporting a Disney movie. Now, let me say this: if Black people had spent that same $700 million on Disney stock, let me tell you what would have happened. Disney stock over the last 6 months has risen astronomically. It was about 116 on November 12th of 2018. And now it's risen to 137. And so if we put that money into Disney stock, then that 700 million would have grown to something close to $1 billion or a little bit more in just a few months. And the point is not to say, don't go to the movies. It's to say, never put as much money into consumption as you put into investment. Investment should, in your household, if you want to get ahead, one of the key measuring sticks for getting ahead is to make sure your investment outweighs your consumption. Do me a favor, hit the thumbs up button. If you haven't hit the thumbs up button, please do that. Larry Cobb, John Doe, how you doing? Good to see you. So we're on the Black Financial Channel. If you want to talk about financial stuff, this is where I just talk about financial stuff on this YouTube channel. You can go to theblackfinancialchannel.com. That's theblackfinancialchannel.com. So this particular story that I'm reading here about Warren Buffett basically says that a lot of people are questioning Warren Buffett. He's had a tough year. They said that his Berkshire Hathaway brand, where the shares on the Berkshire Hathaway that I know of, is the shares are insanely expensive. I forgot how much the Berkshire Hathaway stock. I mean, it's some ridiculous amount of money. Let me see here. Yeah, the price of Berkshire Hathaway stock is $325,000. So, yeah, yeah, yeah. Buying one share will probably cost more than most people's houses. And they do that for a reason. I mean, Warren Buffett wanted his stock to be $20 a share. He could do that easily. All you have to do is do a stock split, but he doesn't deliberately for different reasons. One potential reason is what they call the clientele effect, where basically you just set your stock price so high that you will only attract certain kinds of investors. So I'm guessing that Warren Buffett only wants certain kinds of people owning shares of his company. When you have your stock out there for the public to buy, anybody can buy it. And if your shares are selling for $1 a piece or $10 a piece, then that means anybody can vote on the direction of your company, especially if they're not restricted shares, et cetera. And, when you go public, just know that you might raise a lot of money, but you're also giving up a lot of power. So it sounds to me like maybe this method is a play to make sure that he doesn't have to give away a lot of power. I don't know. I got to go research that a little bit. I'll go look into that and get back to you about it. Let's see here. So is having a Roth IRA good to have on top of a 401k? Yeah, I mean, I think IRAs and 401ks are the first place you should start, and then the Roth IRA is a good one too, because it's just like a regular IRA, except you pay with post-tax money instead of pre-tax money, but your money's allowed to grow tax-free and all that good stuff. So yeah, I think all that's good. The key is really just being an investor. I mean, the big leap is actually going from being a non-investor to being an investor. That's where the gap in wealth comes from. When they talk about this wealth gap and they act like they don't know where it came from, a lot of it actually comes from stock market investing. People that have the biggest, who are on the big end of the wealth gap, invest in the stock market. Those who just try to make their money working, they lose, because American society is structured in a way that is biased heavily against working class people. People that work just don't. You just don't have the right vehicle. If all you do is you make your money through working, you don't own any real estate, you don't own a business, and you don't own stock, then you're kind of like trying to get down the road on a bicycle when everybody else is driving a Porsche, or they're riding in helicopters and airplanes. So ultimately, you got to get into that space of investing. How do you feel investing in gold and silver? I feel like it's fine. I mean, I own gold, I own silver. I buy a little bit of everything. I'm a big believer in diversification. I mean, every now and then, if I see a dip in the market and I want to position myself to possibly take advantage of a move that I think a stock might make, I might buy some stock options. But truth be told, most of the theories, that we learned in school pretty much said that, if you pick and you pick right, it's a lot of it's luck. A lot, I mean, I can sit here and say, oh, I'm so smart and that's why I made this money. Well, no, typically when I make a lot of money, the rest of the market's making a lot of money. Like right now, the stock market is just kind of where the herd of everybody is doing well. And I'm doing well. Yeah. I mean, there are some of the companies that I really liked that are doing extremely well, like GE. What's another one? Disney, Nike, not Nike. What was the other one? Yum Brands in China. I bought some Yum China. I think they still own like Pepsi and Pizza Hut and all that. And I just happen to like the company. The key thing is that, even a bad investment is better than spending, because if you spend money, your money's gone. Your money's gone for good, for sure, no question about it. But if you invest your money, then at least you have something to show for it. So even a bad investment is better than spending. Just keep that in mind. Gentrification is a positive or negative. I think gentrification is just a thing. I don't know if it's positive or negative. I mean, it depends on how you look at it. I think if people want to go and conquer or own certain territory and they have the money to buy it, then the only way to fight gentrification is you have to have some sort of economic mobilization. I think what does make it difficult for Black people is that white people have most of the cash, most of the wealth. They also have a more coordinated financial strategy than Black people do. So we could fight gentrification, but we have to unify our forces. And we're not very good at economic unity just yet. We're getting better, but not just yet. JD, our financial coaches. I don't know what that means. I don't know if you had a question with that. JD Smith, Dr. Mike Queen and I are financial coaches in the Kenwood High Park area. How can we connect? Okay, we are blackcoupletravels.com. Send an email to manager@boycewatkins.com. That's manager@boycewatkins.com. And tell her I said that I'd like to have you on my podcast. And also we can, we can network. You can network with Michelle, my manager. I don't have a lot of time to do a lot of stuff, but she's the person that kind of gets to know the people that we'd like to know. So I think that's really great. I like what you're saying there. All right. So anyway, some other things of the question with Warren Buffett. Please hit the thumbs up button if you haven't done that. Hit the thumbs up button. And also, if you live in Philadelphia, I'll be in Philadelphia on May 19th doing a day-long financial or investing seminar. It's a financial Juneteenth seminar, and we're going to talk about investing. We're going to break it down, explain how to invest, what investing looks like, how stocks work, how to turn your child into a millionaire, how to make the 100-year plan for your family, all of that stuff. And so if you're interested, you can go to drboycephiladelphia.com. That's drboycephiladelphia.com. Okay, so let's see here. They said Berkshire Hathaway stock is up 6.6% in 2019. Which is really low compared to the 18% gain for the S&P 500. So the S&P 500 as a whole has outshined the Berkshire Hathaway shares. Literally 3 times greater. And I'm going to speculate that perhaps part of it might be due to Warren Buffett's very conservative nature. Buffett isn't a guy who invests in a lot of like what they call high price earnings ratio stocks, like tech stocks and things like that. The stocks that tend to really rubber band out, into the stratosphere when the market does well. So what happens with Buffett, I've seen, is that when the market goes way down, he just goes down a little. But when the market goes way up, he just goes up a little. So it's kind of like, it's what they call the beta. The beta is kind of like how your portfolio moves when the market moves. So the market kind of does this, and Buffett's portfolio does that. So he doesn't go too far down, doesn't go too far up. So it's actually a smart play, but it makes you look bad when the market's doing really, really well, and you have a lot of what we have right now, which would be called irrational exuberance. Let me say what you want about the Trump presidency, but under the Trump presidency, the market has just taken off. In fact, I'd almost predict, get ready for another 4 years of Trump, because the economy has done extremely well under Trump, and also the stock market has done extremely well. Now, again, maybe you're upset because he wants to build a border wall, or because he doesn't like Colin Kaepernick. Personally, I just could care less. I don't care. Colin Kaepernick is fine. He's got $50 million in the bank. He's going to be okay. But for some people, Trump offends them and they want to see a different president. I just don't care. I kind of believe, that what we do ourselves plays a bigger role in our financial outcomes than who the president is. That's just my 2 cents. But anyway, let's see here. Even if we're critical, please do something with Jay Jones, a Black entrepreneur blueprint. He's right there in Philly. Okay, well, tell him to email us. We only can talk to the people that reach out to us or that we bump into. So, that sounds good to me. Sounds like what he's doing is really interesting. Greetings, Dr. Boyce. How are you doing today? I'm doing very well. Excuse me for a minute. I got it. That's funny. Larry Ebanks. Hello, Dr. Watkins. I got a question. I noticed and I'm really depressed because I keep getting rejected by people so many times, and now I want to get them back. What should I do? Getting rejected by people. Rejected by people. I don't know what you mean by that. Rejected by people. You talking about relationship rejection? If it's about a woman, man, don't let that bring you down. I mean, there's plenty of fish in the sea, and there's books out there literally on how to get what you want, in terms of dating and relationships, and I think that a big part of caring about yourself is just making the decision that you are worthy. Like really, self-esteem is a big thing, and a lot of times we let other people get us down when we need other people to validate us. And so my theory is, don't let other people decide how you feel about yourself. You need to decide that independently. So I know that's different from the financial conversation, but I do care about you and I want to see you do well. What's the email address again? It is manager@boycewatkins.com. That's manager@boycewatkins.com. Hey Doc, can we talk about value investing? Yeah, I do have a stock market class where I go into that stuff in extreme detail. It's theblackstockmarketprogram.com. That's theblackstockmarketprogram.com. But basically, value investing is kind of centered around this idea of finding what they call undervalued assets. And basically, there are measuring sticks you can use, like price earnings ratio, book value, book to market ratios, as they call it, where you compare the book value to the market value of a stock. And you make an assessment on whether or not you think a stock is over or undervalued based on certain criteria. But even then, a lot of the theory says that sometimes when you think something's undervalued, it's either because maybe you're super smart and you just figured out something the market has not. But a lot of cases it's because there's something about that company that you haven't factored in. It's like if you're walking down the street and you see a big box full of money right in the middle of the street, and everybody else is walking past that box full of money. A smart person would stop and say, why is nobody else picking up this money, right? They would look around like, doesn't anybody else see this money, right? Well, that's kind of what it is when you find a so-called undervalued stock. But Warren Buffett is pretty good, I think, at finding undervalued companies. I think largely because he doesn't just go in as a simple investor. Warren Buffett is able to really move the market. He's like Donald Trump used to be back in the day. When Donald Trump would buy up shares of your company, the whole market would move because of what Trump was doing. So Warren Buffett has that same power. When Buffett does something, the whole market moves. So I personally think that there is a Buffett effect where it's almost like the way a star or a planet is so big that it changes the gravity around it, and all the objects around it are responding to the gravitational pull of that large body object. So what effectively occurs, I think, is when Buffett goes in and he doesn't just buy like 1,000 shares of your company. Buffett's going to come in and buy 20% or whatever. And when Buffett owns 20% of your company and he's bringing this star power with him, he's influencing your shareholders. Even the people who have shares that he doesn't own, he can just tell them, he can write a letter and send a letter out or put something on his website that says, we need to get rid of the CEO, and they're going to get rid of the CEO. So effectively, I believe that his ability to shape his own destiny sort of makes his investing moves almost like a self-fulfilling prophecy. When Buffett comes into your company, you're going to typically see a move in the stock price of that company because Buffett is there. Right. I know personally, if I had a company and somebody told me, oh, Buffett just took over and he's going to come in and do whatever he does, well, I might go and buy more shares because I'm thinking, well, yeah, whatever he's going to do is probably going to be good. So Buffett kind of has special abilities. I don't know if it's because he's especially good at analysis. I think that if he were able to move in the market without people knowing that it's him, I don't know if he'd have the same effect as when people know that he's there. But I do think Buffett does have something special. I think he's a very good investor. I think he's worth paying attention to, but he's not the be all end all. I think that's really important too. So here's some questions that they ask about Buffett, or questions they say that Buffett will have to answer when he goes to his next meeting. First is, who's going to be his successor? His partner, a guy named Munger, last name Munger, Charlie Munger, his vice chair, is 95 years old. Holy crap. And so he hasn't really named his successor, but he keeps hinting at his successor. But Buffett's 89, so you should probably pick somebody pretty soon. The second question they're going to ask is, what are you going to do with all that cash? So Buffett is sitting on a ton of cash, about $112 billion. He says he might make an acquisition with it or something like that. So people are wondering like what he's going to do with that cash. I think Buffett, when he makes his value investing, I think one of the things I think he does is he looks for companies I think that can be tweaked and made better. Like, okay, well, this company could be better if they got a better CEO, or this company could be better if I came in with my cash and helped them get more liquidity so they can make better financial moves. Or this company could be better if I merged them with this other company I own so that they can actually get more things done, right, with the assets that they have, so they can use their assets in a more efficient way, right? Like, oh, this is a hot dog company. Well, I own a company that makes buns. So you mix that hot dog company with my bun company, then each of them is worth $1 billion, but the combined company could be worth 2.5 billion, right? That's why you do mergers. You do them for synergy. Synergy is where 1+1 is not 2. Synergy is where 1+1 becomes 3. Right? Like marriage, like a good marriage is synergy, right? But some people's marriages become, 1 plus -5 turns into -4, right? So don't marry the wrong person. But if you marry the right person, then you get synergy and therefore you win. What's next for the weaker links? Buffett's made some really bad investments this year. Like Kraft Heinz is one of his worst investments. I think it's plummeted by 20%. So they're wondering what he's going to do with that. I personally am curious because they said that they slashed costs at Kraft and Heinz. They merged. So Kraft and Heinz merged 4 years ago. They slashed costs. It has failed to invest enough in new products that younger consumers want. That led to a massive write-down of Kraft Heinz's assets earlier this year, and questions about whether the company can turn things around. I kind of think, I think Buffett's going to make some shifts in that company. And actually, given that Buffett is disappointed in their results and they have this massive drop, I'd be curious to see what the company does for the rest of the year. I wouldn't be surprised if something does happen, but I think at the same time, these things don't happen overnight, right? So when you buy stocks, you're buying assets that you hold. Like, think about buying a stock like buying a house. You don't buy a house with the plan to sell the house a month later. You buy the house because you plan to live there for a few years. Let's see, he's riding on trust at this point. He could say the sky is orange. That is true. I agree with you, Larry. He doesn't look at making companies better. He doesn't look for synergies. He doesn't. Okay. Well, I don't know if I agree with that, Larry, but I hear your point. But I think synergy is one of the most important factors in all investing. You don't buy assets just because they're going to make money. You buy them based on how they fit with your pre-existing portfolio, right? That's one of the most important aspects of investing. So I don't know if I completely agree with that, but you certainly have the right to your opinion. I'm not going to argue with you on that for sure. Okay, so anyway, I'm going to go. I just wanted to say hi to you guys, and I want to remind you, my book Black American Money is done. This is literally the what do they call it, the proof copy, and it's 450 pages, and it covers all different kinds of. It's a mix between. It's basically, if I were to describe what the book kind of stands for, it stands for what Black people need to do now when it comes to money, and why economic power is so important for our liberation as Black people. So some of the chapters are, these are different lectures that are transcribed, and some of them are chapters I wrote. How to quit your job and make money, 7 golden rules of love and money, the 7 golden rules of kids and money, how to be a millionaire by retirement, how to start an investment club, the secret to financial security, and then there's actually a speech that I gave that's actually transcribed in here. So it's written in very plain language so anybody can understand it. And I think it's something that will change your life. So feel free, if you want to take a look at my other books that are out there, or get other books like Powernomics, stuff like that, you can go to drboycebooks.com. That's drboycebooks.com. And also, of course, we have our financial workbooks for children. I show you guys these because summer is coming and you got kids that you want to prepare for the future. You want them to be part of our economic army, our community where we create the most financially sophisticated young people in the world. I believe we can do that by the year 2070. These are some of the tools we created to help you do that. So this is one for middle school kids. And there are lessons on stock investing, things like that, and different ways to teach these things to your kids. So if you're interested, please go to financialworkbooks.com. That's financialworkbooks.com. Do I believe that Warren Buffett has lost his ability to predict stocks and to be a great investor? No, I do not. But I do think that his style of being very conservative is probably what people are saying. And when you have that conservative style, you look bad when the market does really well, but you look good when the market does really bad. And I guarantee you that if there were a massive market crash, Warren Buffett would be one of the last people to really get hit the hardest. So I'm about to go, guys. I see some of you have some more specific stock market questions. I have a great curriculum on stock market investing. If you've taken a look at it, tell everybody how great it is, because I know you're going to love it. You can get a degree from the Black Business School if you go through the curriculum. It's at theblackstockmarketprogram.com, theblackstockmarketprogram.com. Learning to invest is the most important thing you can learn in your life. It's more important than getting a college degree. Learning to invest is more important than getting a college degree. I've done both. learning to invest was more important than getting a college degree. Not that college degrees are not important, but learning to invest is more important than getting a college degree. That's all I'm going to say on that. So feel free to go take a look. It's theblackstockmarketprogram.com. I'm out of here, guys. You have a good day, and I'll see you soon.